Welcome everyone to episode 151, Capital Markets. We're going to get right into it as I will be doing this solo. Job changes. Ted Bowen transitioned to Dillig Bowen Group as partner and managing director, bringing over a decade of experience advising ultra-high net worth families. Based in Chicago, Ted draws on his background at Merrill Lynch and Credit Suisse, as well as his leadership roles in startups and with Crate and Barrel. So clearly a really kind of impressive background, very variable. A graduate of Loyola University Chicago with distinct honors, Ted combines strategic insight with a strong commitment to personalized wealth strategies and management. Best of luck, Ted. Now, for number 2, Lindsay Kane Leverton joined Savvy as a wealth advisor after transitioning from Northwestern Mutual on November 10th, 2025. Based in Austin, one of my favorite cities. I went to school in Dallas, but I still prefer Austin. Very good pizza. Really random, but very good pizza. She brings her expertise in financial planning and client service to help individuals craft customized strategies for their financial goals. Lindsay earned her undergraduate degree from Texas A&M University and is recognized for her holistic client-first approach to wealth management. And I think this is really a prevailing sentiment these days, is people really want that client-first approach. And I think that's why RIAs are really seeing so much traction, is that people want a fiduciary. People want someone that's acting in their best interest and someone that's really devising a tailored strategy that caters to their needs. Now, number 3, Derek Williams is the founder and wealth manager at True Harvest Wealth Management in Boise, with more than 15 years of experience at Country Financial. And yes, for everyone wondering, I am older than 15, I'm 24. Derek built his firm around a relationship-driven approach that blends insurance, investment, and financial planning expertise. He's a chartered financial consultant and holds a degree in business management and human resources from Portland State University. Derek's mission is simple: to help clients grow and protect their wealth through trust and long-term partnership. So a lot of exciting stuff going on there. So let's get to the wealth management area. Flagstaff, Arizona-based by the way, terrific name for a city. I mean, Flagstaff, that's such a cool name. Flagstaff, Arizona-based Cambium Wealth Partners joined RFG Advisory's $7 billion up RIA platform, bringing with it $340 million in client assets. Cambium has 5 financial advisors and is led by Mary Huntley and Josh Seisman. Santa Barbara, California-based World Investment Advisors, which is backed by its parent company, World Insurance Associates, sounds quite worldly, which is in turn supported by private equity investments from Charles Bank Capital Partners and Goldman Sachs Asset Management, acquired Nashville, New Hampshire-based TCG Wealth Management. The $140 million firm will join World Investment's Boston Harbor Wealth Advisors branch. And I think this is really aligns with a huge theme. PE firms are really consolidating, rolling up insurance. There's a lot of appetite for it. I think people see insurance as something that's, inelastic in a lot of regards, and like the demand just will never wane, whether it be car insurance, health insurance, other types of insurance. CAPNOR, the family office of ex-Goldman Sachs banker Louis DeClercq, acquired the remaining stake of PE VC-focused advisory and co-investment firm Calista Direct Investors, having taken a majority stake earlier this year. CAPNOR intends to combine the firm's operations with an eye on creating a platform dedicated to direct investments and selected private equity funds. DeClercq, whose family founded car parking company Interparking, will continue as CEO of the combined operations, with Calista founder Raja Makor remaining as part of the leadership team. So a lot of exciting news unfolding on the wealth management front. We are going to hit it off to investments and searches. So the public employee retirement system of Idaho, the potatoes there evidently are amazing, with over $25 billion in AUM, and has a general consultant of Callan Associates and a private credit consultant of Callan Associates. So what did they do? They approved Hamilton Lane's recommendation to commit between $35 million and $85 million to STG Allegro Fund 2. Subject to completion of due diligence and legal review, the allocation aligns with the system's private equity pacing model and was unanimously approved by the board. So obviously, clearly a very popular move right there. The Seattle City Employees Retirement System, which has over $4 billion, almost $4.5 billion in AUM, and is based in Seattle, which was quite evident there. And it has general consultant of NEPPC and a private credit consultant of NEPC. So what did they do? They unanimously approved a commitment of up to $20 million to A-Core Opportunistic Credit Fund 2 based on a recommendation by staff and NEPC. The deal marks SCERS' fourth private credit manager after its $40 million commitment to Arcmont Direct Lending Fund 5. And I think this just really discusses how there's just such a hunger for private credit, something that we frequently talk about, and like more and more LPs are just seeing it as such a move, and the institutional appetite, I mean, is just genuinely immense. So the Fresno County Employees Retirement Association, with almost $7 billion in assets over management, and it's located near the San Francisco area, it has a general consultant, NEPC, but private credit consultant is Axia. The Fresno County Employees Retirement Association finalized 2 private market commitments totaling roughly $54 million in October, made up of $25 million to A-Core Opportunistic Credit Fund 2, so obviously very popular right now, and 25 million euros, which equates to $29 million to PIMCO European Data Center Opportunity Fund. By the way, that is just such a really interesting fund. I mean, the push for data centers right now amid electrification and the AI boom is obviously quite popular, and it's just really being able to monetize and capitalize on such an amazing opportunity. I mean, the demand for energy right now, the demand for data centers just because of AI is truly immense. So being able to capitalize on this via a fund, I think that's a really cool vehicle and really just kind of exciting fun to talk about. The commitment deals were first approved in April and August, respectively, both passing by unanimous votes. So there's been a lot of unanimous votes. I don't know what the noun version of that is, but I'll figure it out later on. So what does this all mean? So we've thrown a lot at you. There's a lot to digest and unpack. So here's some things that really stood out to me personally. The line between entrepreneur and fund manager is blurring. Cardone Ventures' $70 million raise highlights how founder operators are stepping into private equity, building investment platforms rooted in entrepreneurial ecosystems rather than institutional pedigrees. Pedigrees is one of my favorite words, by the way. The next wave of capital formation is coming from business builders turned investors, bringing fresh deal flow but less traditional structures. So a huge divergence from the norm, which is obviously very exciting in a lot of regards. For GPs, brand and narrative now matter as much as track record when courting accredited capital. You got to get some credit from that. And I think that's really interesting, the line between entrepreneur and fund manager. And I think that's evidenced also by the rise of SBICs. I think a lot of SBICs that are run by GPs and private equity, private credit, venture capital, they're investing in small businesses. So in a way, they're being an entrepreneur. They're being a small business owner in a lot of respects. SBICs are one of my favorite investment vehicles. Specialized themes are outperforming general strategies. Lowercarbon's Fusion Fund and Section Partners late-stage vehicles show that focused strategies are winning attention in a crowded fundraising environment. Investors want clarity. In areas like climate tech, secondaries, or founder liquidity, and the rewarding managers who tell a precise, high-conviction story. The takeaway, specialization is the new scale. And I think also climate technologies are just something that are becoming immensely popular. People really like, I feel like the push for nuclear, which a lot of people are saying the future. SMRs are really courting a lot of capital investment. AGS, associated with geothermal is also, I think, a little glossed over, but I think it's gaining a lot of traction. And then, of course, natural gas in tandem with CCUS, carbon capture, utilization, storage, that's something that is immensely popular. But last, but certainly not least, mid-sized public plans are driving the next wave of innovation. And I think innovation is a word that people just love. Recent moves by Idaho PERS, Seattle City, and Fresno County revealed that mid-tier public systems are taking the lead in private market innovation, adopting flexible pacing models and exploring themes like digital infrastructure, as evidenced by the huge push for data centers. I think digital infrastructure is the new normal infrastructure in a lot of respects. For GPs, this is a reminder to nurture relationships beyond the mega allocators, where decisions move faster and partnerships can grow deeper. What's the bottom line? Capital markets are shifting from scale to precision. Entrepreneurs are becoming allocators. LPs are seeking sharper thematic exposure. And mid-market institutions are shaping the next wave of opportunity. For GPs, success hinges on authentic expertise and a focused story, not just assets under management. For LPs, it's time to back emerging talent, building differentiated platforms for the decade ahead. And so for fundraising updates, a lot of exciting stuff on this front, seriously. Chris Sacca, co-founder of Lowercarbon Capital, said the venture capital firm is speaking with investors about its second nuclear fusion fund. I know I mentioned nuclear earlier. The successor to a $250 million investment vehicle closed in 2022. A person familiar with the matter said the firm is looking to eclipse their first fund, which Lowercarbon used to support startups including Commonwealth Fusion Systems, Princeton Stellarators, and Exemer. And I think also, like I said, the hunger for nuclear is huge. People see it as a low carbon source, but something that's able to meet this just insatiable demand for energy. I think it's the future, and also the amount of capital, government capital, private capital backing it is just substantial. And I think it really bodes well for the people that are bullish on nuclear energy. Section Partners has so far raised capital totaling $189 million across its Section Capital 5 and Section Ventures 2 funds, which are targeting $300 million and $50 million respectively. The Palo Alto, California-based multi-strategy investment firm received commitments from new and existing investors for the funds, including co-investments with a capital earmarked for late-stage venture-backed technology companies. Cardone Ventures has reportedly raised $70 million for a private equity vehicle that will support the growth of small businesses. The engine of America, the mom and pop shops that help make this economy so great. The Scottsdale, Arizona-based firm, co-founded by Brandon Dawson, Nally Dawson, and Grant Cardone, is aiming to raise between $100 million and $200 million for the investment vehicle. I looked it up. It's non-SBIC. I thought it was for some reason, but again, nonetheless, private equity vehicle and fund that is helping bolster small businesses is just truly a really cool fund that does a great deal of good. We have one more cocktail for the rest of the year. We have Philadelphia next week, November 20th, 2025, at the Union League. I will be there. Please come out. Again, if you have any inquiries, questions, or anything, just please reach out to me. And thanks for coming out. I will see you Friday.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.